Hey Matthew, what's going on?
Not much, Felix. How are you doing?
Good, good. I've been watching this BE. We are long now calls, and there's news out today. Well, RBC analysts came out and basically said that BE finally made a proposal for
Yeah.
900 megawatts for this
Ooh,
this construction ground in Wyoming, which is widely rumored to be for OpenAI, right? And so we go back to the BE had this deal with Oracle. Oracle had this massive partnership deal with OpenAI. 2 days later, the Oracle BE announcement was made. So I think connecting the dots here, it looks like if they win this, and I think they probably have a good chance. If they win this, it would be a big announcement for Bloom Energy. Plus, you got the shorts in there of the last couple of weeks with two big upgrades, but the price the target stock price was about $50 lower, so it was basically a downgrade still. Um, so that's that. So that's in that space, and we know we know that idea. We understand it. I want to think about the hyperscalers now who are
yeah.
spending all this money. AI spend through the roof, right? Capex. It seems like quarter to quarter, you have the hyperscalers. Oh yeah, everything's great, and we're gonna keep doing more next year and the next quarter, and so on and so forth. Because of that let's call it $1 trillion spend over the next couple of years, you have the whole AI data center ecosystem, the supply chain, value chain, whatever you want to call it underneath, all those stocks are exploding higher as well. Okay, based on this dollar flow. So the question is, we get the bull case. What's the bear case? The bear case is what's going to stop that spend? What could stop that spend? And it goes back to this power idea that we had, something like Bloom. The reason Bloom is going up is because the demand for power is so high. They actually have to look at someone like at Bloom Energy right now, which many thought nobody would ever care about Bloom Energy. But now they have to go to them because they're mobile and everything else clean and they can get you done in 90 days. What if the power demand can't meet the needs for the hyperscalers build out? All of a sudden, you have Amazon, Google, Meta, um, Microsoft all saying, well, the demand is still there, but we have to wait for the power to catch up or the grid. We're spending more money on getting the power to where we need it. That would be a spark that would cause, wait a second, that means they're going to stop buying or delay buying for
Yeah.
a year, 18 months, however long. And the problems with the grid are years. It's not like weeks. It's not like, oh, my computer's broken.
Yeah.
I go to a repair shop and they fix it. I come back, pick it up a week later. No, this is years that
Yeah.
it
You
could
can't
take
you
to get
can't
ready.
build these overnight.
Not overnight at all. And so that is the problem. Yeah, it's a bull scenario for someone like Bloom Energy, but for the ecosystem, you could see a major dent in the story. And I would like to figure out nothing to do right now, but I would like to figure out when these things are turning. I want to catch the next turn. Okay, because the next turn is going to come when they start selling some of these things a little bit. Even if the top guys owning this, they sell 10%. These things will come off a little bit here. 10% of their
Yeah.
just clip it for the end of the year. And I want to be there when it's starting to turn because it's that news that when the news comes out, these things are going to be way low already. So, I believe that the hedge funds and these big investors will start getting an inkling of that negative thought about demand meeting supply. What do you think?
Okay. Yeah, I mean, I think that definitely could be a case, and I think just even seeing like Bloom Energy and other like that kind of reaction, right? It was like an upgrade, but it was like the upgrade, the price target was still way below, right? And you saw
Right.
this huge move out of it, and it spooked people, right? Like so, like you're gonna see investors come out of things really quickly, so you'll get that move lower and it will be violent. I think with these hyperscalers, the move's going to be violent in both directions, right? Like,
Right.
so I mean, I definitely think that's definitely something we can do. We can look at different ways to capture this momentum, whether it's on the upside or downside.
Yeah.
So, is
What
there,
are your thoughts? I know we don't have anything right now. What are your thoughts on how do you think about it? Teach us a little bit about what your
yeah.
thoughts are. We're not trying to catch the 50-day and the 200. They're too far below, so that's not going to work. But we want to try to catch that the loss of momentum. So what? Tell us your thoughts on how to do that. How to think about that.
Yeah, so I mean, for me, I would start looking at like something like if we're swing trading this, we're gonna kind of look at it like on an hourly basis, right? Like we're gonna break that down and we're gonna use maybe like we can run it out to like the 20-day moving average as well, but we'll break that down into an hourly basis so that when we see like maybe some of the short-term moving averages on the hourly, you start seeing that topping pattern kind of pop up there. And then once it cracks and breaks down below like maybe that 20-day moving average, and we'll use like the 200 unit moving average on the hourly basis, that's where you kind of get these cascade waterfalls. So I do this a lot of times in other kind of trading as well, where we got this topping pattern going, and then you get these short-term moving averages getting really tight, and then once you kind of crack below them, you get the big move lower.
Do you have a graph just to show me?
Yep, yep. Let's see if we can pull something up here for everybody. All right, so here's just a chart, a quick chart that we used. It's nothing. I'm really kind of just putting on a lot of moving averages here so we can see kind of how these cascades look. I like cleaner charts, but for us to develop signals, we need to see what is working and what is not
Right.
working.
What happens when something actually starts cascading lower? Like this bloom right here
Exactly.
when the
So
with
this
the
is this is exactly the bloom energy, right? We got that kind of upgrade, which was essentially in a weird way a downgrade because it was upgraded with a lower price target, right? And we've seen some initiations, I think, as well, maybe with some
it was back to back. It was Bank
yeah.
of America and Jeffries.
Okay. So as you can see here, this is just a very simple chart. This is 65-minute, but I mean that correlates really well with the 60-minute chart too. Um, and you can see, these short-term moving averages, you got the 10 and 20 moving average, and then this is the 50, and these are EMAs. Down here is this 20-day moving average. So we could do like something really short-term hedging, right? Like, so you can see here, you've got this kind of crossover. This happens a little too frequently. Like you can kind of get the moves here on these
Yeah, I
10
was
and
gonna say,
20s.
yeah.
But once you get this move, like the 10 maybe through the 50 or the 20 through the 50 here, 10 through the 50 might be even a better one, or maybe we can even look at the 5. We can kind of investigate it,
Yeah.
kind of get this move lower. You can see how it just lost momentum and you kind of just
Exactly. That's what
cascade
I'm looking for.
lower.
Exactly. I'm looking
Yep.
for some type of signal that's going to keep me in for a little bit longer than usual.
And usually a lot of times you get a bounce here at this 200-day, but you didn't even get that. A lot of the times, so we could set up a parameter too, like the recapture of this 20 units on the hourly, like, hey, okay, get out. I caught this quick, nice short. Nothing, I don't want to get stopped out of it, right? But once you kind of get that same setup again, like say you get that again, and now we finally break, this is the 20-day moving average down here we have going.
20
Um,
or yeah.
so this one right here, yeah, this orange line right here is actually the 20-day.
Okay.
I laid that on there and you can see exactly where it caught it, right? Caught a lot of people.
Yeah.
Pre-market, it was lower, but then, as soon as we opened, we pushed right back above that 20-day moving average and then we headed higher again.
So maybe it's like the recross of the like a cross back up, the bullish cross of the 20-day.
Yeah, so maybe the bullish cross of this 20-day, this 20 unit, right? And
Yeah.
we'll try to do that to capture the upside, and then maybe like we'll develop maybe something even on the bearish side, right? Try to capture these momentum moves down lower, right? So that
Okay.
maybe we can capture both momentum sides. I think that's a great idea as well because these things are really going to be moving. I think.
They'll be moving fast. They will probably all look something like this. Like you look at
Yep.
like INQ. That's another one. INQ. Put that in there. That's not an AI. It's more quantum, but it just turned a little bit here.
Yep.
Um,
And
and
you
you
can
can
see
start seeing
very
same
similar.
similar. Yeah.
Very similar. Crosses that 50 EMA on that hourly. You got these negative moving averages, and you kind of got to move lower. You probably would have got maybe no, you actually wouldn't have because it wouldn't have opened with the options. It would have opened lower. You probably would have stayed in this trade here, and you'd still probably be in this short actually here, even automating this system out. So if we take out that extended time, which is something we're actually going to be adding to the system, right?
Yeah.
We want that extended time period so that we can use that to especially do like zero DTEs. But right now you'd still be kind of in this trade, right? Like you would have an execution, you'd be able to get lower, and you'd be running this down lower here.
They're all
Yep.
going to look like this. So you'll work with me with this. We're going to set up a focus list, and then we want something that's going to catch that momentum back down to the downside
Yeah.
when they start moving. and and that way we'll have like 25 stocks that are in this ecosystem, and we'll start seeing when they turn, and I want to catch that. I want to catch that move to the downside. And I don't know
Okay.
when it's going to happen. You know, it's one of these things, whether it's this quarter with earnings coming up in the next few weeks, or it's the next quarter. But at some point, the light bulb's going to go off that they can't keep building and buying chips and letting them sit in a factory just sitting
Yep.
there, without energy. It's just not gonna. They're not gonna do that anymore. They'll come out and they'll use different language, so the narrative will change. And I think that's part of the clues that we need to watch.
Yeah, and I think they're going to be great option traders too. I just think over the next year, 2 years even maybe. I mean, these are
Yeah,
going to be names that are just going to be work extremely well with optionality. Like so you can capture that momentum, capture that convexity on the upside and the downside.
perfect.
So I think these are going to be ways to do it. So we can build a list. Do
Yeah,
you have
I have a
you have a
stock
list
list
in
together.
mind?
I'm gonna put it in, and then maybe you could do a little back testing on and
Yep.
figure out what you think is the best, and then we'll start there, yeah, and we'll come back and finish it up and see what we got.
Yeah, I'll try to backtest some things that we can capture some downside and some upside in these names, and then we can maybe make some stuff that's a little bit shorter term so people can keep playing this because I mean they're just violent. You've seen it like you said today. Huge move up off that 20-day moving average. You could have captured great gains already. So,
Perfect. Perfect.
all
All right. Sounds good, Matthew. We'll talk later.